During the first 2 years of the pandemic, 99% of humanity lost ground. While millions of people lost their livelihoods and global incomes dropped, the world's 10 richest men doubled their fortunes, averaging about $1.3 billion in gains every single day. To the ultra-wealthy, a global crisis acts as a mechanical, highly predictable wealth transfer event. Policies and political decisions made during these periods of economic devastation engineered this massive increase in inequality. High-level signals of this engineering are appearing again. Warren Buffett is currently hoarding $325 billion in cash, the largest cash in corporate history, because he cannot find any investments priced low enough to buy. Simultaneously, tech founders like Mark Zuckerberg and Jeff Bezos have sold billions of dollars in their own company stock as prices hit all-time highs. These liquidations align with a 3-step playbook used by the wealthiest investors before the crash of 1929, the Black Monday of 1987, and the collapse of 2008. By building these massive cash positions now, the smart money is signaling a coming market reset. The first move is the cash conversion. Elites exit when asset prices detach from reality, converting their holdings into cash to preserve their capital for the eventual collapse. Today, that exit is driven by a massive fracture in the commercial real estate market. Trillions in debt are hitting a wall of maturity, a period where vast numbers of loans come due and must be paid or refinanced. The shift toward remote work has decimated the demand for these spaces. In hubs like New York City, office values have dropped by as much as 45%, turning once prime assets into potential liabilities. This chart shows the staircase-like spike in the federal funds rate. These high rates make refinancing nearly impossible. Sustaining rates at this high plateau creates a pressure cooker, forcing owners to sell and triggering a downward spiral in property values. Building historic cash piles allows billionaires to sidestep the initial shock of this real estate and market correction. However, cash has a weakness during a market crash. To stabilize a failing economy, governments usually print money, which leads to currency debasement, a reduction in the actual value and purchasing power of the dollar. To counter this, the wealthy pivot to hard assets, accumulating physical gold to ensure their wealth survives the inflation that follows a bailout. Central banks worldwide are currently buying gold at record levels, not seen in decades, positioning themselves for the currency devaluation they anticipate. Gold retains its value even when paper currency loses its purchasing power, serving as a primary tool for wealth preservation. The third trade is the volatility bet. Billionaires actively bet against the system using credit default swaps. These are financial instruments that act like insurance policies, paying out massive profits if a specific bank or bond defaults. These bets target the fragility of regional banks, which are heavily exposed to commercial real estate. The sudden collapses of institutions like Signature Bank were the first signs of this instability. As property defaults mount, more regional lenders will struggle, causing the value of these volatility bets to rise dramatically. Trade 3 turns systemic economic failure into a source of privatized profit, generating wealth from the very collapse that wipes out other investors. Once the market bottom hits, the hidden final phase begins, the fourth trade. This occurs during peak panic, when the everyday economy freezes. While the public deals with job losses and liquidations, billionaires deploy the cash they protected. They aggressively buy real estate, stocks, and entire companies for pennies on the dollar during these periods of maximum fear. This sequence allows the elite to acquire generational assets from those forced to sell at the bottom of the cycle. This mechanical playbook is the primary driver of the widening gap between the ultra-wealthy and the rest of the world. The result is a cycle where policies protect the gains of a privileged few, while the majority of society bears the direct harm of economic loss. In previous cycles, the recognition phase, the period where elites began hoarding cash, historically precedes a total collapse by about 12 to 18 months. Because Trade 1 is happening right now, the window for this reset is likely very close. Recognizing the pattern of these 3 trades is the only way to avoid becoming collateral damage in the next transfer of wealth.